Well, hello everyone, and either good morning or good afternoon, depending on which part of the country you might be in. Thank you and welcome for joining our session today that will be focused on intercompany postings for Microsoft Dynamics GP. A little bit of logistics before we get started here. We will be going through, the plan today is to go through few slides to put some context around a product demonstration of our solution. Towards the end, I've allotted a little bit of time for a Q&A session. So if you find yourself wondering about a specific feature that I'd be demonstrating or something specific that you would like to see addressed with our solution, feel free to share that into the question panel, and at the end I will have a member of our team, Derek, participate on the call and share those questions that I can answer live for you at the end of the presentation. So welcome again. First start by introducing myself. My name is Carol Darcy and I'm a Senior Manager Solution Specialist here at Nolan. Got extensive experience with both Dynamics GP implementation and supporting various ISV solutions in the past. And today we're going to focus on Nolan Business Solutions. Nolan as an organization is a Microsoft partner for well over 20 years. We are gold certified in enterprise resource planning, as well as silver certified on data analytics. Just a little bit about us as well. We have worldwide offices starting in North America with our Boulder office in Colorado. We also have office and staff located in the United Kingdom. We've been developing and supporting Microsoft Dynamics GP for well over 20 years. Our products are used worldwide in the Dynamics GP community, and we include solutions for intercompany accounting. So this is going to be the focus of our webinar series this week. We're going to be talking about our intercompany series, starting with intercompany postings today. On Thursday, we will cover a little bit more specific around AR for cash receipts, as well as inventory movement between organizations. So that will be the topic this week. Next week, we're going to cover a number of scenarios around advanced bank reconciliation, as well as credit card reconciliations. And we'll finish our series with a touch on our electronic payment solution. Today, as I mentioned, we're going to focus our conversation around intercompany postings. When we think about intercompany postings, intercompany accounting, what are the business scenarios that our solution would help you address? So if you're looking for a way to perhaps centralize your account payable function, still keep the ability to effectively distribute intercompany expenses across multiple GP database, this is what we can definitely help you with. Another solution we often implement is the concept of a centralized payroll integration. Perhaps you have an external payroll system to your Dynamics GP environment. There is a need to record payroll entry every pay period. With our solution, you have the ability to have a centralized journal entry into one source database, oftentimes the parent company who might be actually paying the payroll expense, but with our solution, you can effectively streamline the intercompany expense distribution across multiple companies. So with that single entry, you have the ability to impact multiple GP databases at a time. Similar concept around intercompany revenue allocation. You've got situations where revenue needs to be allocated across multiple companies. Our Nolan Intercompany can help you with that. And similarly, if we think of a management fee allocation type context or scenario, this is something that at the GL level, we can also help with the allocation of. So when we think about intercompany accounting, some of the key challenges when we design our solution, we were thinking, well, what are some of the challenges of people that are either do not have within their Dynamics GP environment an intercompany solution? So perhaps it's a very manual process that you're currently using for your intercompany accounting process. Perhaps you're using Microsoft Dynamics intercompany module, but what are some of the key challenges that we meant to address with our solution? So we really have we can help you with the current challenge of having to do duplicate data entry or posting across multiple companies. If you find yourself having to do dual entry or posting in order to void transactions, previously entered transactions, we can help address that. Perhaps you're struggling with your current drill down capabilities, so that when you're on the receiving end of an clears the visibility or audit trail of where that transaction originated from. We can help address that. Overall, with our automated process, we're hoping to help with the challenge of reconciling and keeping in balance your due to, due from accounts between organizations. And we will also briefly touch on our ability to support, which currently you might be limited with. If you have limitations around intercompany checkbook or cash transfers, we can help with that. We also have some support for fixed and variable allocation accounts, which can become really handy to facilitate cost allocation or revenue allocations. And we also have full support for analytical accounting. So if you're encountering any of the key challenges highlighted on the slides, I think we have a solution for you. In intercompany postings. So our solution is a full automation of the intercompany posting process. The idea is that we take the original transaction in the originating company, allow you to do posting, and depending on the method or the posting options that you select, which we'll get into in a moment, we automate the posting to the destination company. So our intercompany module will initiate that posting all the way through to the destination company, therefore eliminating some of the additional steps that you might be required to take today for intercompany accounting. With our tool, we also have, there's not just one single way of doing things. We have some posting options in order to meet what could be, specific needs to your organization. Essentially, we have two posting methods. One of them we call the trigger method. I will demonstrate that in a moment in our product demonstration. You'll see that this one is a little bit more what I like to call a direct method, where you do a little bit of work up front with predefining a one-to-one relationship between your GL accounts, between the various databases, and having done that predefinition or that relationship up front allows you essentially on the GL distribution screen of any module in GP the ability to post to any GL account, whether it's within that source company or into a destination company that you've created a relationship with. So a little bit more work up front, but I think significantly streamline the data entry process afterwards. So we will enter a transaction with the trigger method so you can understand that better. The second option for some individual is to maybe more similarly to the GP intercompany functionality, where the only requirement from a setup standpoint is to create a relationship between the due to and from accounts between the source and the destination company. And at the time of data entry, we open a modified window that essentially lets you choose the destination GL accounts at that point in time. Because we require the need of a modified GL distribution entry window for that method, we focused our development on adapting the GL transaction entry, AP transaction entry, AR, bank, and bank transfer with that method. So at this time, I think to help visualize the different ways that you can post with our tool, we're gonna jump right into Dynamics GP. And we will demonstrate a payable transaction entry that I will enter using both methods. So that will really help you visualize what the main difference is, what the options are for you, You don't need to use one method or the others. We have a lot of organization using a combination of both. So hence the flexibility that we can provide to your organization. So a payable entry is something that most people can relate to, so that's where I'm going to start. I'm going to go to a payable transaction entry window. We're going to record a posting scenario that sees us receive perhaps an insurance invoice from our insurance company. And we're going to enter document number, doesn't really matter. And then let's say that the invoice is $1,200. So where Nolan comes into play here is the need. So the first method we talked about was the trigger method. So again, if you recall, I mentioned that the idea behind the trigger method is the ability to select a GL account right onto the main screen that is associated with any GL account in any GL databases that we can have. So currently, I have two databases for the demonstration purposes. We have company, my initial intercompany, or my source company 11 is where we're going to initiate the transaction, and we're going to post an entry to company 12. Now, the company identifier in my segment, in this case, for visual purposes, is in the last segment of my chart of account, but that company identifier can be anywhere in the GL string that you have. So the importance of a GL identifier here is to allow us from a setup standpoint, which we're not going to have time to get into today. If you're interested in understanding that a little bit more, we're happy to set up a follow-up session. But in the GL string with the trigger method, we want to have some sort of company identifier that will allow us to associate which company database that we're trying to post to. So in my case, I'm looking at the third segment of my chart, and 11 represents this company that we're into, and then 12 will represent the destination company that we're trying to post to. So based on that, we're seeing that by default, we're attempting to post this expense to our company vehicle insurance account in company 11. Perhaps I want to do a distribution to another database as well, I just want to associate 250 into my main company. Main company is footing the whole bill, so we're going to leave accounts payable in company 11 as well, but we're going to distribute the rest of the expense to my company 12. So we're going to go ahead and do a 950. So you can see how simple the data entry becomes with the trigger method, because I have created an association in my setup, a relationship between 641012 as a trigger account in this company to the GL account in my destination company that we're going to go and post to. So without having to worry about do from accounts or anything like that, that will all happen in the background. The user can simply just do a GL distribution using any account from any GL database, and then proceed with the posting of that entry, which we're going to do here. So I'm going to quickly add this badge, and we're going to save and go here and post. I'm going to spare you a couple of the journals here. I'm going to show you a couple but not the first two. So the first report that we're going to look at is our Nolan Intercompany report. So if you remember, we had a trigger account, what we call a trigger account on that GL distribution. Therefore, it triggered an intercompany relationship. That trigger is of twofold. We have the initial journal 53 that was posted that included that trigger account, which then created a source control posting. So we need to do a control posting to properly update the due from account in this company. And then we went to company 12 and posted the associated journal over there. So to help you visualize that a little bit more, I find that it's easier to look at our journal inquiry versus those reports from GP. Therefore, we're going to go to our journal entry inquiry here. And here's the entry as we entered in the AP module. So that entry doesn't get affected. So it's entered as, it's posted as entered, and we see the full distribution to the accounts payable as well as the multiple expense distribution. What Nolan did upon posting this is it recognized the fact that 6410 is not an account that is part of this chart of account, but it truly belongs to the other organization or to another database. So it actually cleared that balance out, because those trigger accounts will always have a remaining balance of 0 in the source company and can be therefore easily excluded from any financial reporting. And then we are moving that credit or that balance to the due from company 1200, or due from related entities in this case. So that's the first part of the trigger posting. We have, you'll notice some pretty handy audit trail code with a batch ID that starts with an IC to clearly identify this entry as originating from an intercompany process. And then the reference will give further details around that, exactly which database the journal entry originated from and which entry, so that there's always that clear association between the intercompany entry and the original entry that generated it. In the same token, I am now switching to company 12 so that I can demonstrate the straight through posting that occurred here. So if we're looking at our expense accounts, 6410 company vehicle insurance in this company as well, we can see the 950 that we just posted today. If we drill back to the journal entry, we can see also proper audit trail identifying this entry as originating from an intercompany transaction. Which database? So specifically, my R8 ICP is the database name of company 11. And even more so, more specifically, journal 53 is what initiated or triggered this entry in our destination company. If you remember, I highlighted challenges around intercompany accounting and the fact that there's often, loss of the link of those transactions between the two databases. So essentially, again, re-highlighting that you always have that clear visual or audit trail of how a journal entry was created or where it originated from. And we also have very powerful drill back capabilities by being able to click on our source document here and be able to see with our intercompany payable entries zoom window in destination company where that expense distribution came from. So we can have full visibility to the actual invoice that generated this entry, Burnett Associate for 1200, and I can see the full entry from the originating company as well, showing the full distribution should I need to, or should I want to know who else had some expense distributed to from that invoice. So that is kind of the end result of a intercompany transaction entered using the trigger method. So for demonstration purposes here, we're going to enter the exact same entry, but we're going to do it with the other method or the other posting option that you have with our tool, which we call the alternate method. If you recall from earlier, the alternate method is where there is no necessarily association at the GL account level of one GL account to the other GL account in the database. There's a simple, in this case, a simple association of due to, due from account, and the decision of where something is being expensed to is made at the time of GL distribution in this case. So let's go ahead and get a second invoice from Burnett and Associates. And we're gonna enter an invoice for 750 in this case. Now, as I mentioned before, instead of selecting an expense account in the other company to eliminate the need to do this association ahead of time, I can simply focus on posting to my through my due to, due from accounts. So I could decide that I want to distribute this to company 12 still, but in this case, we're gonna select the due to, due from account. the mere fact of selecting a do to do from account that has a relationship with a do to do from account in another database will enable this little IC icon on your distribution screen, allowing you to open up that modified alternate account entry window that we were talking about. You'll see a direct association between the 129911 account and the 129912 in the other database. So that relationship is already predefined and established through the process. So that association allows me now on the destination account field, when I click on the lookup window here, we're actually going to sort of open up a window, hence why we call it modified window sometimes a little bit, to use the GP term, but also the window into the chart of account in the other database, where at that moment in time, at that data entry time, I can select where I want to post this. So we can see from the header section here that I am looking at the chart of account in company 12. I could scroll down to select the account that I want to post to, or a little bit more quickly here, I know where I want to post to. So I'm going to simply enter the same account we used earlier. So just a different data entry process, this one more focused on understanding the do to do from account relationship and allowing you to open up a window into the destination company's chart of account to select your distribution at that moment in time. So saving that now, we are going to also post this entry. And save. I'm going to spare you a couple journals, and then we'll do a similar check here of our journal entry inquiry. Here's confirmation because I posted to a do to do from account that has a relationship to another do to do from account in another database. Nolan initiated its intercompany process and proceeded with a posting in this case, simply in the other database. So in this database, we just have our initial posting as entered, accounts payable against due from related entity. And if we are to go to company 12, so I'm back in company 12, and we look at that drill back again, we can see the second entry, 750, that was received through the alternate method this time, and with a similar posting of the expense against the due to company 11 in this case. Same visual in terms of batch ID and reference, so same audit trail, same association between the journal entries, same drill back capability. So truly, whether one wants to use the trigger method or the alternate method is purely your choice, depending on what your specific needs might be. And those are kind of hopefully helps you visualize the difference between the two. So one is more focused on initial setup to streamline the data entry process. The other one is a little bit simpler on the setup side, giving you maybe a little bit more flexibility at the time of data entry. Another type of transaction I wanted to demonstrate that I know is often in the GP world a bit of a challenge is to facilitate intercompany posting of cash transfers. So doing an actual checkbook to checkbook transfer in Dynamics GP. So while we're in here, let's do a quick demonstration of that. So back to my transaction menu here, I'm in company 11 where I'm going to initiate a cash transfer from one checkbook to the other checkbook. So with our tool, we have a slightly modified bank transfer entry window that allows me, through the do to do from relationship, the ability to transfer cash from one checkbook ID in my source company to a checkbook ID in a destination company. So we can see that, let's use a scenario where perhaps I want to transfer $1,000 from our main operating account here in the parent company, and I want to transfer some payroll money to a payroll account in one of the related company. So to initiate an intercompany transaction here, we're going to specify an intercompany account or a do to do from account which in our case was the 12/12, 9/9/11. And we can see automatically that our modified window here recognizes this due to due from account and will automatically on the right-hand side associate the due to due from account in the appropriate destination company. If we're doing a transfer of $1,000 as an example, now with that destination company already flagged on the right-hand side, when I click on the lookup glass here, I will see the list of checkbook IDs available in company 12. We can see that from the header. So I'm actually, again, having this little window into the other database, allowing me to select the checkbook there. So let's transfer to our payroll account in there, and then we can go ahead and post that. So what happens now is have the bank transfer entry, just like I would any bank transfer entry. And then because a due to due from account was selected, we have an intercompany process that was initiated to the other database. So let's go ahead and take a quick peek at that. So if we look at, I'm back in company 12, we take a look at our checkbook register, and we can see that in the payroll account, we now have the $1,000 transfer, and once again, have full visibility and audit trail to the original bank transfer that initiated that transaction. So essentially, those were kind of the quick, today is a quick overview to give you sort of an appreciation of what our intercompany posting tool can do for you. A little bit of a recap here. Essentially, Nolan Intercompany Posting will provide some enhanced functionality that will help you save time and money in a couple areas. So really eliminating that duplicate entry or dual entry you might be doing today, depending on whether you're on a manual process or not. So keep in mind that with our tool, you can have an automatic batch posting all the way through to destination company. So you didn't see me, having to go to the destination company and post the batch that was created. We have set up capabilities that allows you to post all the way through should you choose to. If you don't, then there's also that configuration option that allows you to create a journal entry, but perhaps there's a separate approval process that needs to occur there. So lots of posting options available with our tool. Again, highlighting that void transactions can occur across companies with a single-handedly voiding a transaction in the initial company. Full drill back capabilities to the original source. Trigger method is supported across all GP module, which is a significant enhancement to the GP intercompany capability. And then we support a multitude of scenarios from intercompany cash transfers to intra-company and fund accounting. So what I demonstrated today was actually doing intercompany transactions between GP databases, but we can also support intercompany transaction within a single database for the purpose of doing something like intra-company or intra-fund accounting. Fixed variable allocation accounts are really handy to automate allocations. We fully support that through our automated process also. Analytical accounting and obviously multi-currency transactions are fully supported as well. Quick customer feedback for you to look at. So we have someone sort of vouching for how our tool has been able to help with the month-end reconciliation and having to balance out the due to due from, no more manual entries required, much less hours of reconciling between companies. And that's really improving sort of control over the intercompany accounting and posting. So I'm going to open it up. I know I'm just right into the 30 minute. For those of you that might have to leave us at this time, keep in mind that we have our webinar series for going on for the rest of the month. And our next session is this Thursday, where I'm going to cover some additional intercompany scenarios from for AR for cash receipts, as well as inventory movements. So feel free to join us for that. And in the meantime, I will open it up for Q&A And Derek or Dylan, if you want to join me and let me know if there's any questions
Hey, Carol.
that I can help answer. Hi, Derek.
Hey, yeah, no, that was great. So far, I'm not seeing any questions. So, yeah, looks like did a pretty thorough job of explaining things.
Perfect. Well, it was still a bit of an overview, but as I mentioned throughout the demonstration, if you've got maybe even after the call, if you've got some follow-up questions, if you want a more individual demo to review your specific needs and how they would be addressed with our tool, we'd be happy to do that. And as I mentioned, also we have, this is just the first of a 5-part webinar series. On Thursday, we're going to talk about AR for cash receipts that would help you streamline processing of payments across multiple companies. So that helps address a scenario where perhaps you have a customer that is dealing with many of your entities. You want to be able to receive a single cash receipt and allocate it across companies. We can help you with that. I see we're going to talk about intercompany pop to stop and our automated loop to help keep purchase orders, sales orders, payments, and receipt and balance between related companies. So if that is of interest to you, that would be our session on Thursday. You can register, I believe in the chat, we have put a link. If you want to go ahead and register for any of our follow-up sessions, feel free to do so. So with that, I will thank everyone for your time today, and I hope to see you all again on Thursday. Thank you.